Let's get into the good, the bad, and the ugly. Get ready for the Alternative Investment Hour with Jeff Johnson, ex-Wall Street insider and longtime CEO, with Robert Kuhn, registered investment advisor and successful money manager, as they introduce you to alternative investments that are not dependent on the market. The Alternative Investment Hour starts now.
This past week, there was a big economic event in Davos, and all of the heads of anybody who's anybody were there,
right?
Talking about the market. And we're starting to see headlines come out that one that kind of caught my interest was, we are in a worse place than we were a year ago. A top mutual fund or investment fund manager, says,
Look, you can't be serious, man. You cannot be serious.
But, I think most advisors, Jeff, are just that. They're closet index fund managers, and they slap a fee on an account.
They're nuts. They know nothing.
We have Ray Dalio. He runs the largest hedge fund in the world, $120 some odd billion. And in Davos this week, here was his comment that piqued my interest. The next economic downturn is what scares me most.
Yeah, you hear that a lot. I mean, you turn on CNBC, whatever you want to listen to as far as where you get your information, and I'm hearing that more and more. I normally don't pay attention to the public markets hardly at all. And the third point that I was going to make, number one, income. Know your business, number one.
Sure.
Number two, income. And I said one more. There's two more points. Stay out of debt.
Yeah.
If you can, don't over-lever, because markets will turn. Even though I'm not in the stock market, some of our risk is oil price. And if people stop drilling, then, your business is going to contract a little bit. So don't be in debt. And when the markets do turn, you can be proactive, go take advantage of situations, excuse me, and instead of having to respond to a bank. And then the next thing is save on income taxes.
Sure.
Any strategy you can so you can keep more dollars of what you earned is just that much further ahead.
I completely agree. And if you want to learn more about the strategy that we're recommending for 20 to 30%, 40% of someone's portfolio, text PROTECT 474747, 10% distributions. I guess the question that I have for individuals is, if you're not 100% convinced that if the markets drop 30%, that you won't lose a penny or something in the single digit range, then it's probably time to talk to an advisor.
Well, and we talked about this before. Take the Yale Endowment Fund, Harvard Endowment Fund, any of the larger endowment funds, and they're pressing 30, 40, up to 50% in alternatives. And I believe that your son Andrew was saying as high as 90%
in some instances.
Yeah,
and that's what is concerning, is that, and we'll get into this in the next segment, but it's controlling what you can control, which is having a strategy in place to not lose money, period. Wow. Yeah.
So you're going to typically get less of what you tax.
Sure.
And more of what you incentivize.
Yeah.
I mean, that's just rule 101 of life.
And I think one thing that we talk a lot about, and I think the point that you make is genius, and I did say it was genius.
Wow.
There you go.
That's pretty cool.
Text PROTECT to 474747 if you want to learn about tax strategies and also 10% distribution. But when the markets went down in December, all right, or even if they go down this year, 20%, all right, 10%. I mean, on average, markets correct 20% or greater generally every 3 to 4 years, all right? And if you don't sell, you don't get to take advantage of that loss that you're taking.
Right.
We meet with individuals, and you don't have to be super rich, but nobody likes to pay more than they want in taxes, but touch on the tax benefits of Fund H2O. And after that, we're going to get into kind of what alternatives means. And you told me a story, and I want you to tell that to our listeners.
Yep. 2018 tax law that passed lowered the rates quite a bit. But one of the biggest benefits in that tax bill that became law is what is known as bonus depreciation. So generally speaking, any capital assets, anything you acquire, build, generally speaking, less than a 20-year depreciation schedule,
okay,
you can accelerate that to year one. And the equipment in saltwater disposal facilities and pipelines and those sort of things qualifies. And if you come in, our fund is structured as a partnership. If someone invests as a co-GP, then they're going to get that about 70 to 80%, we think, will go to offset their income. So if you invest $100,000, we believe that there will be about 70 to 80,000 that you can offset against 1099 and W-2 income, and that's meaningful.
Oh my goodness.
You've been listening to the Alternative Investment Hour. Investing is hard. Harder if you only have one strategy. Stay with us. Jeff Johnson and Robert Kuhn will be right back.